New PPP loan and PPP loan alternative up to 26,000 per employee without having to pay it back. And an alternative up to 2 million, 5 million plus, incredibly fast business funding without collateral, no hard credit checks, bad credit is acceptable, and lower documentation. Hi, my name is Michael with Viral Funding Solutions. I'm a business loan broker expert who's been able to gratefully and humbly help out a lot of businesses of different backgrounds and industries get the right type of financing. So what you see here on the share screen is a document I'll be going into, scrolling down in a moment. And you see new PPP loan and the PPP loan alternative. Now, what's happening there with the PPP? Is it still going on? What will happen in the future? What does this 26,000 per employee have to do with the PPP loan, if anything, or is it just separate and much more? You see here an image come in, we're open, but what is exactly? And underneath here, now I'm going to jump into this next segment. In case you haven't heard, some of us just don't follow it closely. Perhaps you never got a PPP loan, you tried, you weren't eligible maybe for another draw, etc. I'll cover some of that. It ended in May of 2021. And to a lot of us, that's not a huge bomb drop. That's just, okay, we know. Thanks for reminding me. Now, just stick around because you will get more details, and also follow through the very end of this video because I'll give you some bonus tips and show you what to do and navigate the space outside of this. So it ended in May of 2021. The first, second draw plus, and the modification to those of you who had a first draw who were eligible for a second draw up to 2 million or so. I mean, that's come and gone. That's not new. That's old news, but not all of us track that. So I'm also giving you some details here on the forgiveness stages. So please stick with me. I won't touch upon the EIDL if that's what you were concerned with. I have already released content on this and I will continue to in the future for more updates. But look down below in the description where I should have recent videos on that and what's happening with things like the deferment, forgiveness, alternatives to the EIDL, as well as the PPP. So the PPP loan here can be forgiven for the following: payroll costs, along with rent or utilities, business mortgage interest payments, and or. So there's been a lot of fraudulent activity. People who don't use the PPP for their best advantage business-wise, they're using it for a lot of other like personal, in-depth reasons that I'm not going to touch upon in this video because there are a lot of stories that I can dive deep into, but I'll just leave it at the surface level for now. But so much fraudulent activity, and even those that were suspicious of being fraudulent, you're seeing them being forgiveness, like quote unquote passing that finish line. And it isn't acceptable, but it's just so demanding and it can be very meticulous. And a lot of the stuff that has to be sorted with these PPP loans. So be very careful and mindful of that. You also see that on the EIDL side of the equation. So many stories going there. And again, I'm not touching upon those exactly at this moment. So over 90% have been forgiven, as in all of those applicants and all of those who've received the PPP loan and PPP loans. And just looking at those and seeing how much of those individuals have we already processed and forgiven in those terms. So millions still remain to be processed and taken care of. Look through 4.6 plus billion fraudulent PPP loans, which is equal to more than 70,000 loans. Now, there's more evidence that 64.2 billion were gathered from non-registered businesses, businesses using residential addresses, and businesses claiming a higher than normal payroll. And that's the number that it's like we're looking at now because we're basing it off more data and looking deeper into these scenarios. So it is crazy what's happening here, not only with fraudulent PPP loans, how much of these have been forgiven, what's been forgiven, what's yet to be forgiven, and so much more. So getting it forgiven, if you still can by the time you're watching this, I just want to put this out there though. You can apply for forgiveness at any time up to its maturity date of the loan, according to the Treasury. If you have any outstanding loan of 50,000 or less, file a one-page form on the Department of Treasury's website, and it'll look like this. So I may not leave this down below in the description, but that's what you see here. Make sure you see the name, Paycheck Protection Program, PPP Loan Forgiveness Application Form, 358, 3508S. That's the one you want. and you'll want to go through the business legal name, borrower, DBA, or trade name if applicable, and just go through those sorts. SBA PPP loan number, lender PPP loan number. You can see that. Some check boxes there, some initialing per se, and then the date title. So more or less, that's what you're expecting there. On what you want to make sure you fill in. By signing below, you make the following representations and certification on behalf of the borrower. So make sure you go ahead and sign those and you have those taken care of. Now, coming back to this document, again, like I said earlier, I showed you just seconds ago, make sure you go through that if you haven't, not those checkbox per se, but make sure you check and you do those signatures that you need. Now, there's an alternative out there. It's called the Employee Retention Tax Credit, where you can get up to $26,000 per employee, let's put an E there, in a refundable payroll tax credit. Now, this is not a loan. This is not associated directly with the PPP loan. So there is no usual infraction on PPP loan and ERTC. Now, if you receive the PPP loan, you can be eligible for this Employee Retention Tax Credit program. And I'll go into some of the details of that just below here, but I already created a video in the past walking you through A to Z, how to get started, as well as more resources. So look for those down below. I may show you insight into the application. I may give you a little video review or a long-term one or more of a blog post review, but that'll be down below for more specific details on the Employee Retention Tax Credit. You can also say it as Employee Retention Credits, Employee Retention Tax Credit, ERC for short. You've probably seen that, in a refundable payroll tax credit. So some of the details for the ERC program: you get rewarded for retaining employees during COVID-19. This is a credit program that was signed into law in March of 2020, being part of the CARES Act. Later, it then expanded into the Consolidated Appropriations Act in December of 2020 and the American Rescue Plan Act in June of 2021. This has also a recovery startup program if you started your business after February 15th of 2020 and had annual gross receipts of less than $1 million. Now, down below here, I wanted to separate the two. You get up to $26,000 per employee, and there's a breakdown of that, and I'll actually have it in a different form. I believe it's in the video that I created recently or just some time ago, or in the post. You can also visit that to get more of a little breakdown on how that looks. Available for 2020 and quarters 1 through quarters 3 of 2021. You can qualify with decreased revenue or COVID event. There are also supply chain issues. You're seeing, as part of the COVID event, being that partial or full shutdown, the government mandates on what you were restricted to. Was it partial? Was it full shutdown? What happened during those times? We can look at it more deeper. There's no limit on funding. The ERC is not a loan, as I mentioned earlier, so you don't have to pay this back. A lot of businesses are jumping on top of this ERC refundable tax credit. And if you have not yet to get on this train, do not miss out, because in the following 2 to 3 years, that's at most what we probably are looking for. We don't know if it'll be extended out. We don't know if it'll be pushed back past 2024, 2025 or so. So now's the time to do these with your 941 amended tax returns. And there's a team that I work with specifically of CPAs, perhaps there are attorneys involved, that will meticulously look it over instead of you turning over to your own CPA and them doing it. Because here's the problem: they not necessarily will know all the intricacies. There's a lot. There's letters, there's extra documentation that needs to be assessed, calculated correctly nonetheless. And if you don't even have the right communication, that they're even giving you the right type of information and feeding it back to you, you could be missing out on all of it or just the majority of it. You could be getting a little bit. Instead, you should be getting hundreds upon thousands more. There is a big margin. And your own CPA, they may be thinking at this and going, well, it's too much to handle, but they're just looking at your gross receipts, your revenue decreases, and they're just basing it off of that. There's more to look at. So there are payroll management experts out there, CPAs, all in one, that can help you do more of an in-house setup, look it over. They can help deal with the IRS directly and then come back to you to help recover your credit. And this is going to go a long ways, long term, not only just short term, but you're going to have the necessary credit you need. Think about it like this: if there's ever a need for you then you'll have it. You'll be more prepared and ready if you don't even need to use any of this, let alone get a business loan or an advance, build your business credit, personal credit, whatever that is. You have ways of funding your business. Perhaps you're already circulating enough cash flow in it where you don't have to seek out funding. Probably there's a bank loan in the equation, non-banking, private lending options, but I speak about that in other videos that I'll try to link you to down below. And there will be a questionnaire form in case you haven't filled that out. I may show you if I have time at the end of this video, but there is a business funding questionnaire I created where you can get a very personalized and customized email response on your best funding option and options like no one else does it. And like for myself as an expert in the space, I will show you what you can and can't qualify for. At least you know whether you can or can't. It's better just so you have a better sense of who are the best lenders, underwriters, and who are the best to work with. And I have teamed up and I know the best. I've vetted them through and I've been doing this for a long time and I know what's happened in the markets and like what are the different types of scenarios. And I'll show you those. So make sure you fill that out. I'll leave it down below. And I also just came out with a Business Funding Mastery Academy course, walking you through A to Z on what you need to know, the fundamentals, to the meat and the potatoes, the services, to more of a conclusion on extra resources, on things to do, next steps, etc. And it is unlike anything else out there. You can't find this just on YouTube. Yeah, there will be some content that I put from YouTube on there, but it's not all. There's stuff you'll see from Vimeo, stuff that you wouldn't see just finding it online entirely. Plus, you're going to get a better view and it's going to shape you into not only the business owner or the person who is looking for funding, but you individually, who you need to become to get those other parts in line. So underneath here, as you see already, we went through more or less some of the details. Rewarded, I'm going to go through this. Rewarded for retaining your employees during COVID-19. The credit program was signed into law in March of 2020, being part of the CARES Act, later expanded into the Consolidated Appropriations Act in December of 2020, and the American Rescue Plan in June of 2021. Now, I won't go any deeper. I just wanted to do that just so you have a better sense that this is legitimate. And again, just to mention it here, and you can replay it back, up to $26,000 per employee, available for 2020 Q1 through Q3 of 2021. You can qualify with decreased revenue or COVID event. There's no limit on funding. ERC is not a loan. It's a refundable tax credit. And then you see the Recovery Startup Program. And so there's more to this. Like I said, not to sound too redundant. And I have a list here, but I won't go into the full parameters of it. You can get a credit on part-time employees. There's a way we have to look at it, but it's more based on full-time employees with 30 plus hours per week plus. But we can look at this from a part-time employee standpoint. And I have a few notes that I put together here that I want to go through. But again, that other video will be down below and it'll list more specific details on the ERC program. And I would jump on top of that as soon as possible before it's too late to get in. So yes, the qualifier for it is based on full-time employees in 2019, defined as an average head count with over 30 hours per payroll for the year. To earn a 2020 credit, you cannot have more than 100 full-time employees as an average in 2019. To earn a 2021 credit, though, see 2020 to 2021 here, they cannot have more than 500 employees as an average in 2019. So the max, it is 500 employees in total. And so you see the 100 and then the 500 for 2021, and then different quarters you can get approved for. So Puerto Rico, you have the U.S. Virgin Islands business owners are eligible. Yes, anyone who paid W-2 wages and you filed a 941 tax form. And again, when we go through this, it'll be the 941X amended tax returns, and then we'll have to see, so we're not double dipping. If you have a PPP loan, yes, this can work for you as well. They're not directly correlated in that regard, but we don't want to double dip and say, yeah, we got you this here, so we can get you that, or more or less that. So W-2 paid wages and filed a 941 tax form is eligible to receive the credit. Part-time employees, as I said, all employees that were paid regardless of hours will get into the calculation for the credit. And there's a specific way that we look at that too. Maybe not all are eligible. And the deadline for a 2020 quarter, in case you would wanting to know that, it's April 15th of 2024. The deadline for 2021 quarters is April 15th, 2025, more or less. But I won't go into the specific details. There's more. For like nonprofits, are they okay? Nonprofits are 100% good to go as long as there are W-2 wages, and there are plenty that have been helped, one of those being churches. But again, there's more that I'll cover in the other video. I just plucked out a few of them here just to go over. And that's what I would visit if you want to watch that video. If not, I'll leave a link down below so you can get started with the employee retention tax credit and see if you are going to want to go through it. And there might be a quick quiz qualifier to answer a few set of questions just to make sure when you get to the results, then what documentation we're asking for. That's why I have a video that I created on the application process. So make sure to visit that. Now, what could you do as an alternative up to 2 million, 5 million plus? So there are a lot of different services. You have business term loans that are secured, unsecured, meaning you can offer up collateral secured, unsecured without collateral. They may not come with hard credit checks, excuse me. Some term loan lenders that are unsecured, they will ask for a hard credit check, depends on their, excuse me, their qualifications and requirements. Not all though. And then you see lines of credit that can be soft pulls, cash advance, soft pulls. You have accounts receivable, asset-based financing with any other type of real estate equipment. But you can get some of these incredibly fast with lower documentation, about 3 months of bank statements, sometimes 3 to 6, a copy of your driver's license, and a voided check. And a lot of these are fintech companies now, where you may see a host of lenders, where it's a brokerage. And I already have a lot of those partnerships with those direct lenders, but it's better to work through this vault and this vehicle because there's more flexibility. And there's also the direct lender route, which I work with too. But there may be an instance where this makes more sense, especially in today's market. So without going too specific into each and every one of those alternative 2 million, 5 million plus with or without collateral, good or bad credit, just know that I created content out on this in the past that I'll link you to down below. Just to recap, the new PPP loan, all this stuff has been expired. And I know you're thinking, well, what do you, I already knew this. Well, a lot of us still didn't know it. And we wanted to get a few details, right? We wanted to know some PPP loan details of what's happening with the forgiveness process, where you can go get started if it's still available. What is an alternative up to 26,000 per employee? Perhaps you're looking at the calculated values, and I have those perhaps in a separate video, but we can also work on that and how it all breaks down per quarter to quarter basis if you're eligible. But look down below in the description. Get started with the employee retention tax credit. I'll leave another video if you want to watch an application process. If not, I'll also leave a link where I recommend to get started with payroll management experts, CPAs, etc. What's the best place where at the end of the day, I'm not having to turn to my own CPA because they're not understanding and they're not giving me the best. And that's just how it works a lot of the times. You have to be careful about it. So that is going to conclude everything from me. If you like this video, please give it a thumbs up. Share with others who you feel will get value out of it. If you haven't subscribed, please go ahead and do so and click that bell notification icon so you do not miss any future videos I will be coming out with. That is everything for now. Talk soon.